And welcome everybody back to the Independent Investor channel here on a Friday evening for another 60 minutes of financial tutelage, financial motivation. Everybody needs a little bit every now and then. This is a topic that I enjoy, I love, I've done for most of my life. I appreciate all of the support on the channel for the last 5 years. For you guys that don't know me, my name is Ryan. This is the Independent Investor. We've been doing YouTube for about seven, going on 7 years now, anyway. And the cool part about the way I approach investing, the way I approach my grander life, to be honest with you, this is just a segment of that. I know people will come on to YouTube and they'll sell you that they have all the answers in investing. I think what sets me apart is I've been doing this such a long time. I've been through so many ebbs and flows in the stock market that I can actually share not all the glitz and glamour about the stock market, but rather a more holistic picture about what to expect. And I know sometimes people want to hear the glitz and glamour. They want to hear the roots of what they can do to succeed in investing by putting in as little work as possible. I think that can exist with a lot of luck and very little effort, but not in scale. I think there are tried and true fundamentals to be adhered to. And I've gone through my ebbs and flows, absolutely, in my investment thesis. I'll, go through different motivations of application. And, when I come on to the channel and I talk about, what it is for somebody that is just getting started or is interested in investing, I'm very, very careful to understand what it is that that person needs to hear and not what they want to hear. I've said that many, many times in the channel. It's super important. It's a responsibility that I take very seriously because I do contend that most people out there at least deserve a shot at investing. There's a few criteria or eligibility aspects that I would expect you to bring to the table if this was, in fact, something that you were interested in by nature of where you are in life. Okay, and here are those things. You need to be making money. Okay, even somebody who has been bestowed upon money through an inheritance or has been gifted money cannot have the same appreciation that I would expect from somebody who is working for a living. And I don't care if you earn a salary. I don't care if you're, one of our heroes out there, like our healthcare professionals. Shout out to Rebecca's Quest Fire. She's in the group here. So I got to give her a quick shout out before she gets called into the ER to carry on with her much needed and most appreciated profession. But our heroes out there, right? You got to have some form of income. And I totally understand, man. I do the Independent Investor channel from one of the most powerful cities in the world, New York City. It is a machine here, and I know there's a lot of people who struggle abroad. There's a lot of countries out there where people do struggle to put food on the table. Um, this is an investing channel, and for those people out there that are struggling and are looking for a better life, there is absolutely fundamental value to my channel, probably more so to those patrons of the message as opposed to those people who have, number one, been bestowed upon money or inherited money, don't appreciate the value of money, and are looking for an easy ticket to compound their wealth. I'm here to tell you that there is no easy ticket. There is not. I've been engaged in financial planning or engaged in financial markets for the better part of my life since I was about 15 years old, starting to study the paper. And I was born in the country, so we'd get the Sunday paper once a week, and the Sunday paper was the one that had the stock tickers in it. And I would pull that finance section out, and I would go down and try to figure out how many stock ticker symbols I could I could identify with IBM, Intel, a few companies that I knew did exist. And, I could go through there and pick those stock ticker symbols out, but to read the articles and try to figure out what's going on in the world from really a kind of a sheltered perspective of life out in the country, very simple, much more simple. Some of those attributes I still take to this day in my day-to-day application. I have to pinch myself every now and then because I'm very lucky in what I do. YouTube is not what I do for a profession. It is what I do for a passion, and that is pretty cool. It's reason enough to subscribe to the channel, to be honest with you. I don't expect anything from you. A subscribership will cost you nothing. Uh, Hopefully you can extrapolate all of the value that is meant to be had on this channel, and that is aiming to empower one investor at a time. What does that mean? Is it possible to get through to the masses after 60 minutes on a YouTube delivery? A social media message where somebody like myself is talking to someone out there who does not know me, who I'm presuming needs me. I could just sit here and tell you that this financial devotion and love for this craft came through divine intervention when I was about 15, 16 years old. I will take the high road and just say that I love this topic, even though the divine intervention is absolutely the truth about how that ended up happening, and how I kind of felt like maybe I was destined for something a little bit more normal. Now, this is something that eats entrepreneurs up. We strive daily to get ahead. Life is not short. Life is long. If you truly do appreciate those small things in life, you relish the moments, and it's really quite interesting, a perspective to bring to the table. I often say that I don't have really a lot of patience in life. It was a virtue that I wasn't really blessed with, and I think instead of patience, it's a desire to get ahead, and that desire has brought me to where I am now. Leaving multiple professions behind for the one that I have had for close to 20 years. If I was going to sit here and tell you that I had the secret sauce to investing that you could just deploy next week and everybody could succeed on, I'd be lying to you. I'd be lying to you if I said that my profession didn't single-handedly have the biggest impact on my financial stature as we speak now. I've never been a wealthy man. My wealth and income has never been as a result of a white collar salary. It's always been more of the blue collar, hardworking type of application. Now in my advanced profession, it's mostly mental, which is somewhat more taxing than physical. To be honest with you, I've done both, physical and the mental side seems to draw on me. That's why I augment the physical with early morning workout routine to help balance out the rigor of my specific application of my day-to-day life, and how I keep that good balance out there. But for those patrons out there that are hungry and looking for those answers, they're looking for a break away from the norm, looking for a break from the societal pressures of doing A, B, and C. And if you're not adhering to those societal norms of A, B, and C, then you're an outcast, right? And taking those chances, you're taking risk on the other side to break away from those societal norms is somehow dangerous. Who do you think you are? All people are special. There's no doubt in my mind about that. A lot of really, really good people will fail to get ahead in life. However, I bring to you and pose this idea that what society views as success is a far cry from my definition of success. And in the great idea that Plato and Aristotle had about the universe of forms, and talking about what is absolute in the universe, I think society has a very jaded idea about what true success really is. Um, I think we do a very, very poor job of measuring success against a measure like family. I think we do a very, very poor job, albeit commonplace to suggest that health and well being is of the utmost importance when we've got McDonald's on every single corner of this country. And it still seems to be, myself included, one of those quick alternatives on the list when engaged in travel. For you guys that don't know, I was in Europe last month. We frequented McDonald's quite a bit. It was nice not having to pay €1 to use the restroom when we would go get our quick meal, so we could carry on about our business and get a quick bite to eat. So we weren't we weren't hungry on our travels. But what is success? Is your ability to negotiate through this life in some form of health and quality of life. Where do you measure that in the grand scheme of things? Um, where is your spiritual health in all of this? Are all rich people happy? I watched the Johnny Depp and Amber Heard hearing on Netflix. Um, Disappointing. It wasn't entertaining at all. It was sick, actually. Do I think that Johnny Depp was innocent? No, no, no. I'm a very insightful person. Do I think that they were both trying to generate churn? Of course. I think that was obvious within the first 5 minutes that it was all kind of a dog and pony show. Do I think that what one person said about the other was actually said in nature? I do. Do I think that the truth will ever come out? No, I don't. I was able to glean something. Unfortunately, one of my very favorite actors that I've grown up with, and that is Johnny Depp. But to see him in the court and explain some of the scenarios and have really even not even his accounts, but others' accounts of, just being around him and being so out of control. And to see the blind followership from people who think they know Johnny Depp because they've watched as Edward Scissorhands 100 times. I found that to be also suggestive of a society that really escapes from thinking most of the time. Was it a step back for women's rights? Yeah. This came out after the fact where women were like, good grief, I did. She probably didn't represent herself or the movement as well as she could, but quite frankly, there was so much smokescreen there. You didn't know where to put the truth line in, looking at whether or not she was a victim or 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 something else. I was disappointed I watched it. I felt like I was less of a person after watching it, and somebody that I hold in such high regard. I mean, I'm a nobody. I don't do social media for the glitz and glamour. I certainly don't do it for the F and fame. I don't really even know what that means. We as people, we definitely want to put people on a pedestal, and had it been somebody else other than Johnny Depp, um, it would have been a different outcome. Did the fact that it was Johnny Depp change things and change people's perspective, and the monster of energy that is social media that pushes an agenda out there to influence the way people think about the way an outcome should happen, no matter what each of the individuals say. I think this is where we are as a society, honestly, when we start to examine what we believe success to be. Now, on the Independent Investor channel, I can take you as far as your financial niche goes and I can square you away. Okay. There's a few schools of thought on the channel about what different strategies I engage in and where the predominant focus on each of those strategies are. At present, I will tell you that the current focus now is on the speculative growth segment of where I'm at right now, not only in my life, but my investing thesis about where I look at a current stock market that is hinging upon um, some interesting time. I've monitored a small cap market that has received no favor, irrespective of some very marked progress in the microcap space. I am not a believer that the microcap space is just full of garbage. Um, I'm more of a proponent, the more I study the space, to understand that there is some real innovation coming out of the small cap space, the microcap space. There are some really, really good people that are running these companies. There are real dollars that are going into the R&D necessary to bring these solutions to a stage where they could potentially be earth-changing in what they're trying to bring to bear, whether it be a service or a product or a solution. So I just think that's where the um, the soft spot is in the market. Do I think we need to be pouring into technology? The people have been pouring into technology for the last couple of weeks and they've been kicked in the head in understanding that FOMO buying a specific segment of the market never pays off. Never. I'm going to go through some fundamentals of investing. I have not done this for a while. This is for anybody, and I've got about 1,000 live streams online. I think there's just a bunch of awesome videos, a bunch of catalog. You can watch one live stream and kind of understand what my perspective and philosophy is about stock market investing within a 60-minute time frame. I do apologize because I cannot convey that in 10 minutes. I just can't do it. I'm not capable, nor do I want to talk so fast that I'm jamming so much information out there that people get a sense that I'm, trying to rush the message through and step onto another project. I honestly think that 60 minutes will give you an idea about looking at this as a piece of your life. It can absolutely be controlled. It is something that, if done right, I contend that everybody should do. I believe that if done correctly, it can be a very, very powerful tool in avoiding regret later on in life. I believe that there are too many people that are entering into retirement with a false sense of belief that the government will be there to take care of them. And they are quick to find out that the government is not there in the capacity that they believed that they would be, and they struggle in retirement. And that is a very, very sad fact, my friends. We just went over $1 trillion of total debt in this country with regard to the household debt. There is a little bit of silver lining in that debt, the statistics would suggest, is being managed in a lot more of a responsible manner and reflective of the incomes that people are making higher than average. That debt is a little bit more understandable, albeit alarming, that we seem to find significant value in spending and keeping debt on the books. Right. But you're in for a special treat. If you're new to the channel, stick around. If this isn't for you, you're free to go. It's no problem. But I'm going to run through my philosophies and I'm going to speak as if I'm sitting in the shoes of somebody who is interested in investing and wants to understand my philosophies about investing that has been drawn up for going on about 30 years of investing in the stock market. Guys, stick around. It's going to be a lot of fun tonight. So if you scour through YouTube, it's going to be super confusing. I have people, colleagues, they're like, man alive, I just talked to you for 15 minutes. I understand a heck of a lot more about investing. I would try to go onto YouTube and I just get lost. It's a treasure trove of crappy information out there. Crappy. I'm sure a certain percentage of my information, if taken with the improper lens, could be deemed crappy as well. Why is that? It's because people really need to understand how to interpret information and more importantly, know how it is going to be deployed and the capability and attributes that an individual, a receiver, right, can put those things into rigor to get an anticipated result. Okay, in other words, I feel like YouTube a lot of the time is very, very one way. Okay, we tune in, we're excited, we shut it off, we go on about our day. What value comes out of that? Truly, I don't get it. There's another thing. These cartoons that were on during the Johnny Depp trial, I was like, who are these people who are flocking to these channels and just brushing their teeth in the morning, just enthralled in this really garbage information? It's worthless information. Worthless. All right. So, oh, Ryan, come on, man. What are you going to provide that's actually of value? Well, some of the common questions that we get in investing, not only the who, what, where, why, when, and how to invest, I'm going to go over, but I'm going to give you the best investment to invest in. And I'm going to give you a little bit of thesis as to why that is. Okay. For you guys that have followed me for a long, long time, I'm shifting assets in some capacity from single stock offerings to passive ETFs. I am absolutely of the mindset that I want a certain percentage of my portfolio in dividend growth investing. I'll talk about that a little bit as a strategy, a percentage in speculative growth, right? That's a little bit more of the advanced category that really takes a lot of my focus. But the best investment that you can make for yourself, if you were not to own anything else, you just own Vanguard's S&P 500. You can own SPY. You can own IVV. So VOO, IVV, SPY. Those are the three flagship products. I think, I apologize if I missed one, but you're splitting hairs across each of those offerings because each one of them are going to give you exposure to the large capital, the large capitalization companies in the US stock market times 500. Okay. 500 the largest companies. And you might think, oh, Ryan, that sounds interesting. You've got my attention. Is Tesla in the list? Yes, Tesla's in the list. Calm down. But Tesla might be a bad example for a company that may not be around in 20 years because I believe it to be. But if you go back 20 years from 2023, just 20 short years ago in 2003, and look at the companies in the S&P 500, you will be absolutely astonished to look at some of the companies that were part of the S&P then and are no longer part of the S&P now. Okay. You think, man, that sounds really scary, Ryan. Tell me more. If you go back 30 years in the S&P 500, you're going to find companies in there that you've never even heard of before. Why? Because they also have gone the way of the dodo and they are no longer part of the S&P 500. Why do I set this baseline for you? Is it not safe to suggest that the S&P 500 speaking to you now in 2023 is going to look different 10 years from down the line? Let's say the status quo holds and we are looking at an S&P now that in 2033 is exactly the same as what it is now. We've lost nothing, okay? The S&P always gives you exposure to those standard and poor companies that represent the large capitalization stock market and is being monitored on a daily basis. Okay, stocks fall out of favor, they fall out of the S&P, and in addition, get added into the S&P. So it is a dynamic where you've got your Johnson and Johnsons and Procter and Gambles that have multi-decade statured in the S&P 500, and that will remain intact. However, what makes the S&P 500 a very powerful tool is to inject in the stock market in either 2003, 1993, 2023, or 2033. You are buying a product at the time that represents the current S&P 500 as well as the future S&P 500. Want you to really think about that. Think about how much time you have in engaging in active investing. Think about how much knowledge or wherewithal you might be tuning into me and thinking that I'm going to show you the promised land. I'm not going to do that. Neither is anybody else on YouTube or the grander financial institution. They won't do it either. Okay. So get that out of your head if you think that there's somehow a savior out there that is going to show you the promised land and that pot of gold at the end of the rainbow that you think is so prevalent in stock market investing. It's not. As a matter of fact, it's all elusive and very, very few people get there. And that's why they think that there is a better way to outpace the S&P 500. So when you talk about outpacing the market, it's usually the 10% benchmark of the S&P, 9%, 8% on a down year. The S&P is going to go through years of negative. Last year was a down 20%, but on an average, right, over the long term, the S&P will turn back an average of about 9 to 10 to 11 to 12% or so. You can win with that over the long term. And not to belinger the point, but you are rest assured to have that S&P exposure for as long as you own the equity in your life, and as long as you have gifted it to your children. That S&P can continue to grow and guarantee that you have that exposure to the S&P indefinitely going forward. Very, very powerful. Conversely, for people who insist on engaging in the single stock game, which requires a significant amount of research, a significant amount of instinct, if that's even a criteria to succeed, as it reflects to the grander S&P 500 that I just explained to you is the very best investment you can make, bar none, without making any other investment in your portfolio. Because I think where people fall short, myself included in this philosophy, is when we start to engage in single stock activity, we buy 10, right? And we have an awesome year, right? 8 out of the 10 succeed. This is very realistic, okay? What's probably more realistic is that 6 or 7 of those stocks are going to succeed. And you also have the S&P 500 index that turns back, let's say 10%. Okay. Let's say out of your basket of 10 stocks, you get an aggregate return of 10%, but unfortunately, 3 of those stocks actually turn back 2%, right? On an aggregate, those bad apples, they might not be bad companies, but just going through hard times, bad times, mismanagement, misallocation, and it may just be it may be not in line with what you originally invested in the company, and are not in line with your values as a shareholder in the company. Look at what's going on with Disney right now. Okay. I can stand behind all of the initiatives that Disney is looking to roll out. But I saw an interview from the individual that's playing the Snow White in a year, and I was appalled. I actually was more encouraged to boycott the project. Furthermore, not encouraged at all anymore to visit the theme parks based on the direction that they're going. And the stock sentiment proves that. Now, Disney was a darling 15 years ago. It was an absolute top stock out of 5 to own. It was on my list within the last 6 or 7 years of top stocks to own for the rest of your life. Now, mind you, I own Disney. I own a huge position in Disney. Am I disappointed in the direction that the company has gone? I am. I am, because at the end of the day, I can be for the initiatives that Disney is standing for, but I don't think they're making decisions that are in the best interest of share owners and growing share owner value. It seems like they've taken a political stand, and that's something that I just can't get behind as a share owner. I can get behind it from an initiative perspective and say, yes, indeed, I agree with that initiative. But when I'm down 38% in a company that's supposed to be a blue chip darling, and you might think, well, that's just bad timing, Ryan. That's just your bad luck. Nary of this conversation, none of it was going on when I entered into my first position in Disney. These are some of the things that you have to understand about single stock investing when you enter into single stock. You might pick 6, 7, 8, 9 that work, but it only takes one to really draw that performance down, and it draws it down in a big way year over year. And as you start to compound those years, Disney can't get out of its own way. I've been down in Disney for years and years. And I look at an S&P that started the year this year up 20%. It's given a little bit of that back, but it goes back to my philosophy. I think a lot of people invest to outpace the S&P 500. I think by nature of trying to outthink investing, a lot of people underperform the S&P 500, when all the while, all we have to be doing as investors is the S&P returns, matching the S&P returns. By investing in the S&P 500, you're not only getting that appreciation, but you're getting that defensive mechanism to avoid those significant downturns, which can be very, very detrimental over your portfolio over the long term. Very, very important to understand that perspective. It's something that I've made very, very good money with swing trading, guys. I'm not going to sit here and tell you that you read The Intelligent Investor and you understand that there's only one way of investing, and that's passive investing, only to understand that Warren Buffett knew Benjamin Graham, and by Benjamin Graham's admitted to the bulk of his wealth that he was able to gain in stock market investing came from very few speculative investments that he kind of got lucky on, had some really good conviction on, and was able to take those positions and capitalize on them. Okay. So just something to keep in mind for you guys that are out there and kind of want to understand how to invest. This is so overwhelming. Well, it becomes less overwhelming when I'm just giving you one product that I specifically invest in, that I enjoy investing in. It carries a very, very low expense ratio over the fund, which falls in line with one of my goals, as well as being diversified, as well as coupled with the right account, can give all of the specific goals that a new investor should seek out. And if I'm telling you that those goals can be made just by making those decisions, well, then over time, you'll understand the importance of that. And I think for starting investors, you're as ill prepared to make those educated decisions because you don't know anything about investing. It's so critical to get it right at the beginning and then have the wherewithal to stay steadfast over your program over the long term. The best account to invest in as a young investor is a Roth IRA. All right. Most people are going to make well under the eligibility cap to contribute to a Roth IRA. I would challenge the idea that most everybody out there contributes to a Roth. As a matter of fact, I would presume that most people, let's just say for the fairness sake of discussion, most people have a Roth IRA, okay? But I'm going to come over the top and I'm going to suggest that I don't think most people have the means to max fund that Roth IRA at $6,500 a year. I hope I'm wrong. I hope I'm wrong. I don't think that I am. I think that people are probably doing $100 to $150 per month, what they can afford in that. But the important part here is for the non-investors to understand, or those interested in investing, that the Roth IRA is by far the very best account that you can use. What broker do I go to, Ryan? It doesn't matter. Think of the brokerage as a conduit to the market. Fidelity, TD Ameritrade, Vanguard, Ally, JP Morgan Chase, Merrill, any of the large institutions are going to offer a Roth IRA account through their brokerage services. Okay. They're going to establish that umbrella for you. The umbrella is the Roth IRA. Okay. And then you'll fund the Roth IRA with the capital against your cap for the year. And that's when you're able to enter into equity such as a VOO, like I have in my Roth. Okay. Actually, I have VIG. My wife has VOO. I have a TSP that holds an index fund that is similar to VOO that tracks the S&P 500. Okay. But I just upped my positions in both VOO and VIG as I thought that the sell-off was a little bit too exacerbated over the last couple of weeks. Could I be wrong? Yes, I could. But this week the markets were down pretty much every day except for today. But this morning I actually bought on the dip in the morning because I anticipated a rolling reversal in the market, which we quasi got that, kind of to fall a little bit limp in the afternoon. But that was fine. I was able to buy the markets when it dipped in the morning upon the open. So I was happy about that. But Roth IRA, live it, love it, learn it, know it, open yourself up one. It's free of charge to do that. Make sure it's of a self-directed nature, and you'll be part of the independent investor nation. It's awesome stuff. What are the pillars of investing? Pillars of investing are those things that you can accomplish if you do the aforementioned that I have already mentioned in this live stream. Okay, so if 36 minutes is enough to change somebody's life, these are some of the things that you're going to get out of, let's say, a VOO, IVV, SPY, diversification, to spread your money across a lot of different equities. Companies will come, companies will go. It's very, very rare to have a company that is long standing over the decades, that is so solid, has such a wonderful moat, has such wonderful brand recognition, or provides such a high level service or technology, that it can stand the test of time. Companies do come and go. And if you own that company that goes, it can be detrimental to the portfolio. So we want to spread that out through diversification across multiple assets, and the S&P 500 allows you to do that times 500. Okay, so very, very easy. Pillars of investing. Risk tolerance is a cool thing. I could talk about it all day. I won't bore you with it. However, on a scale of 1 to 10, there are conservative investors, there are moderate investors, and there are aggressive investors. Okay, moderate is at 5. Okay, conservative is from 1 to 5. From 5 to 10 is moderate to aggressive, and then to aggressive. Okay. Most people come to me and they tell me they're a 10. Okay. They are not. You really need to probably be fair to yourself. And if you really are interested in investing, you've read a few books, you understand what I've just talked about with the S&P 500, and you're like, man, I get it. I'm kind of talking the same language as this guy. I totally understand. Award yourself for 5 or 6. That's fine. You know, it can always change over time, and indeed it will if given the chance. All right. But risk tolerance is something that you really need to kind of understand, because you don't want to put in place a super conservative portfolio. You'll be chomping at the bit and you'll be like, damn, I'm missing out. I can do more. Or going completely aggressive on the thing, and now you're not sleeping at night. The only thing you're thinking about is the portfolio and the losses, and this stock market's down, and damn that Ryan guy, he's such an asshole, right? Try to pick something to where you can live your life and keep this thing at check. I highly recommend trying to get this dialed in, so you rule your money and your money doesn't rule you. What an awesome concept. Yes? Capiche. Your investing time horizon, very, very simple. You know, if you're 19, you probably drop a 40-year investment time horizon to 59. My time horizon has me drawn into at 59 and a half. I've got well over a $500,000 of assets. So, one doubling cycle puts me at seven figures. I'm giving it all to my kids anyway. It doesn't matter. I just want the security from the money. That's my goal, which is another one of those things that you should probably ask yourself. Why are you investing? Why? Is it because I'm super motivated? Because I am. I've got motivation coming out my ears. People can watch me and they'll be like, okay, this guy's okay. Yeah, I get it. He's fired up. He thinks that a lot of people should invest. And I wholeheartedly believe that. I do. But you have to understand why for yourself. I can't do that for you. Why are you investing? Is it because your mom and dad did not invest? And it's something that you want to do to build a legacy for your family, both now and in future generations? I don't know. You can have mine. Mine is really simple for financial security. I just want the security later on in life. I want to be able to pack up and go on a vacation. I declared to you guys when I got back from Europe, the coolest things that I did while I was over there were free. Were free. Now, mind you, the tolls to get to the locations and the driving and the fuel to get to those locations and the resorts and the hotels and all that stuff did carry with it a charge. But the coolest things that we did were sitting on a beach staring at crystal clean water. Cost us nothing. Hmm. Yep. Yep. So your investing time horizon, understand, and you can work some statistics off of a 10-year, 20-year, 30, and even 40-year time horizon to understand what your total overall earnings potential over your money are. I can help you with those things. If you know what I mean, go to any one of my videos, pull up the Investing Academy, pull up the compounding calculator with fees, go ahead and plug those numbers in there. If you've never done it, it's quite liberating to understand the power of money over time as it reflects to investment fees over time. The most important aspect of investing is tax protection. You'll get that with the Roth IRA. Wealth preservation is an aspect of the channel that I focus on in way of reducing fees for investors. The S&P 500, the VOO, is a buy and hold forever. You should never justify selling the S&P 500, no matter what, no matter what, no matter how tempting it is, no matter how much looking at that $9,653 of profit, that's profit. That's free money. That's like a fourth of my yearly income sitting there. It has to be sacred to you. It has to be sacred to you, and you have to remain steadfast over the long term. It's something that I champion on the channel as suggesting it is the easiest, most difficult thing that you will ever do in your lifetime. I have failed many, many times at this very philosophy. I charge you with what you should do, not necessarily for what I do, but that is absolutely what you should do as an 18, 19-year-old who's looking to start and establish a position in the large cap S&P 500 US markets. Buy and hold it forever. Buy and hold it forever. Give yourself a decision point when you're 59 and a half to look at it and say, wow, Ryan was right. I'm sitting on 1.7 million, or I'm sitting on 2.83 million. Okay. That 9,300 seemed like a lot at the time, but Ryan said, don't touch it. That's why, right? Give yourself one decision point when you actually need the money, because I'm here to tell you, and the secret in investing is to understand that over the course of your life, you don't need that money. You don't. You don't need to justify crushing your financial portfolio and the progress that you've made by justifying removing $9,563 only to buy a half a car, right? Right. The damaging effects over your portfolio are very, very real. The easiest, most difficult thing that you will ever do. Some of the strategies that I use to actually succeed in investing, I'll go through them rapid fires if I'm firing at you. Eliminate debt. Lots of schools of thought, lots of videos I've put online about different schools of thought about eliminating debt. I'd like to see the debt somewhat under control before you engage in a wealth building strategy for yourself. It's really going to be counterintuitive if you're carrying a big debt load, as well as trying to invest at the same time. I say that tongue in cheek because people can do it. You can do it at the same time. You certainly can, but prove to yourself that you can actually not only eliminate debt, because those debt payments, once they are dissolved, can transition over to either savings contributions or go toward a program that we are talking about for an investment to start working on your positive net worth over time. Okay. So it's super important to eliminate debt, dollar cost average, invest what you can when you can. My contributions are well over $3,000 a month. Um, I can't earmark any time over accumulating this $500,000 of wealth any one time where I got lucky and I got a windfall of 25, 30, 40, $50,000. It's been an absolute grind. It's been an absolute mentally anguishing process, insofar as always kind of thinking that I'm behind a little bit. But in retrospect, I look back 3 years, I look back 5 years, and I'm like, damn, look at the progress that's been made over such a short amount of time. But in the short term, in the now, when I look at it, I'm like, damn, maybe I should be here. I should be here. I should be here. I should be here. And that'll just kind of agonize you a little bit by focusing on that. I do. I'm not perfect. I'm a human being. I often deliberate on where I should be, and if I was in a better position, I could do X, Y, and Z. That's just not how it's panned out, and I'm certainly not going to regret looking at um, um, my investing habits and suggest somehow that my life would have been better off without investing. That's absurd. That's absurd. Investing is the key contributor to putting me where I am now, even in the face of some marked hurdles and misfortune that I've had along the way, right? I've already mentioned the importance of employment and work. Um, you got to work. One of those key attributes that I feel like I'm really, really good at is organization. I feel like a lot of people have the potential to suffer from lack of organization, truly understanding what accounts are degrading their income, what type of cost savings initiatives over the accounts. And for you guys that have a light bulb going above your head right now, and you're like, damn, I've really never thought about that. It's been 15 years since I've looked at the insurance. It's been a long time since I've looked at maybe a new credit card with better benefits. Maybe it's been a while since I've looked at my streaming services, for crying out loud, right? How many of those do you have? How many of them do you need? You know, and nobody's perfect in this discipline, but trying to always look at the organization piece. And it's amazing how I'm always constantly trying to fine tune the program. It's annoying. I tell insurance companies all the time, man, if you could just come with a flat rate, I'd be with you indefinitely for the rest of my life. Now, with that, I have been with Geico for a long, long time. They have earned my business for the last 6 or 7 years, but I have shopped them. And I tell them that I shop them, and they just continue to win my business over. So if you guys are paying exuberant fees for certain things, try to understand I'm not asking you to do a budget. I hate that word. I hate it. Okay. But at least have an idea about what type of deterioration over your monthly paycheck is happening, and how to potentially even eliminate or reduce, right, those types of expenditures. It's only going to add to your health going forward to contribute to a plan. All right. Reduce your spending. It's easy to talk about in the United States. I just went to American Dream. I did overspend on Tuesday night. For you guys that aren't friends with me on Facebook, hit me up. You see, I took all of the popular songs from Guns N' Roses Tuesday night. I got to see Slash for the first time in my life. It was epic. I recorded it. Those recordings are done by me. So hit me up if you're interested in seeing that. If you're a GNR fan, you will want to see some of this stuff. I mean, it was just insane. He ripped a 10-minute solo and then ripped right into Sweet Child of Mine. Um, at the end of one of his songs, I can't remember which one it was, he jumped into Voodoo Child by Jimi Hendrix. It was really just an epic show, man, and really cool stuff. But I talk about the exuberant spending. I just think when you get into such a discipline like myself, I got the tickets for free. Okay. Um, but I, we parked at American Dream, which is a mall that is so obnoxious. And it just kind of feeds into that whole idea that Americans are making their paycheck and spending their paycheck. Statistics would show that people are focusing in on their groceries right now and reeling in spending. What it suggests to me is that people don't have any savings whatsoever to buffer the ebbs and flows in the market. hmm Yeah. So control your spending. Think twice about, especially those larger expenditures in your life. You'll be happy you did. All right. Um, Build and preserve cash. It's one element that a lot of people won't talk about. I do. The cash position should be something that you feel comfortable with, should allow you to sleep easy. It is deteriorating over time with the impacts of inflation. I don't care. I don't care. It is achieving a specific end. And for that, I believe that it is always important to have some emergency cash, liquid and ready to go at a number that you determine is appropriate for you. I have determined that I want a lot of my exposure in stock, different stock forms, equities, things of that nature. So my number right now with my income, I'll just tell you, is around 25,000. That's where I feel comfortable. That's what I have. For a lot of you guys, it may be five. For a lot of you guys, it may be 50. Doesn't matter. I'm not your father. I'm not going to tell you what it is that is right or wrong because there is no right or wrong. It's what you feel comfortable as a single individual, if you're representing yourself, and or in discussions with a spouse, and you guys come to an agreement on what you feel comfortable with as a couple. Okay. All right. Um, I can't read my own writing, but I'm sure it's riveting. Don't get emotional about stock market investing. In the age of social media, there is always a narrative out there. There is always a narrative. We were going to have a recession 2 months ago. We were off the recession just recently. Now we're back on the recession now and back on the recession. And we're going to have a recession. We're not going to have a recession. There's always something to talk about. Okay. The rhetoric will always be there in your face. One thing will be tried and true is that your exposure to the stock market really shouldn't change in reaction to the rhetoric, especially on social media. Okay. Um, Irrespective of any rhetoric you come across, even as persuasive as it might be. Okay. That S&P position should be sacred to you, insofar as, look, you invest what you can when you can at a rate that you are comfortable with and to an amount that you're comfortable with, to the stress test that you're willing to lose it all and still be okay. Okay. Now, I use that example not to scare you, not to say, Jesus, Ryan, I can lose it all. I don't want to invest if that's the key. Okay. That is not the point. The point is not to over lever yourself to the markets and make sure that you're investing what you're comfortable with, insofar as your ability to stay true on that program over the long term. If you only need to invest 25% of what you have to stay long term, so be it. I think you need to toughen up a little bit. But look, we're looking for success here. We're looking for an acknowledgement to the importance of dollars put to work, but put to work in the most advantageous way to avoid that regret down the line when you enter into retirement. Does that make sense? Good. Just nod your head if you're still with me. All right, fantastic. What are the different approaches to investing? Some of the different strategies along a spectrum that I talk about on the channel. Passive investing, it's the easiest form of investing. You do own Tesla, you do own Apple, you do own Microsoft and Google. However, you do not have to look at the cash flow statements of Google and determine that it's a good investment because of their cash flow projections and current performance. That is unnecessary. You own it as part of the index, and your sole performance factor is your year-end percentage rate of return. That is it. That's it. My friend, sometimes you're going to get 2%. Last year returned negative 20%. We will probably be on track for a positive year this year. What that positive is, I have no idea. I don't forecast. I'm not a magician, nor is anybody else. Okay. But if you look back through the history, you can Google this, guys. I'm not just kicking over rocks for you. All right. Look back over the historical rates of return for the S&P for the last 20 years, 50 years. You can do it indefinitely. And you can spot check me on this. It's all over the place, but we're looking for an average rate of return of 8 on the low end to 10% on the high end. With the effects of compounding over your money, you can absolutely win with the effects of compounding on your side. Second, dividend growth investing. I do this through M1 Finance with my 100 stock portfolio. There's about $40,000 in that portfolio. I own about 98 stocks in there. They all pay the dividends. The next one is active investing. That's owning single stock like Google, Microsoft, doing your due diligence, understanding that that is a single equity that's worth investing in. Just be mindful of the fact that you could enter into a Disney and end up with a lemon for multiple years. And it's something that I discourage against for new investors. Don't even entertain it. I don't care what your neighbor told you. I don't care what your friend told you. I don't care what that other YouTuber that wears a ski mask on his face and looks really scary and scares you into thinking that you can outpace the S&P 500. You can't. You can't. You can for a short amount of time, but over the long term, you will lose. You will lose, and you'll come back to this philosophy that I discussed to you guys. And finally, speculative investing. Speculative investing accounts for about 10% of my total overall portfolio now. Names like Hyliion, names like Aduro Clean Technologies, and a couple of others that I'm interested in taking speculative positions in. To try to better my positions, to accelerate my wealth and growth. That's just me. That also is something that I would encourage everyone to be very careful on and make sure that it finds its place. All right, guys, we've got less than 3 minutes here. I do want to go through here. We've got some really cool folks in here real quick. Everclear Boy. Got Justin in the house. Great to see you, my friend. Proper 19. Very cool. Rebecca was first in the house. Very cool stuff. Always good to be playing with house money. I dig it. It's awesome. Started building a position at 80 cents a share and had about 10,000 shares when it spiked above 3 HYPR. Very cool. Good job. Very cool stuff. Like to hear success stories like that. It's awesome. Got Jared's in the house. I will continue to invest in VOO passively as well as buying more on the dips. That's a cool comment. It's kind of a barometer on the stock market, which lets you know, look, if it's retracted a little bit based on your monitoring, that's the time not to crap yourself, rather to invest more in it. Very simple. All right. VUG, I own it myself. That's the Vanguard's Growth ETF. It's a very good product. I totally agree with you. It's a hell of a thumbnail. I love the doors. Very cool stuff, man. Very cool. Scrolling up, got a lot of folks in here, man. I do apologize. I didn't really get to. I own $6,000 worth of Visa, so there's another good one. I appreciate that. They make more than the entire country of Australia with their earnings. Yeah, they're quite good. We got James in the house. All right, just FYI, sometimes we get message from Internet and we don't know if it's really you or a fake fraud stealing your identity. Yeah, no, you'll know if it's me, man. Just ignore that. I'm a hot commodity. I don't know why, to be honest with you. I'm kind of an unknown little small fry on YouTube. But if you ever have a problem with that, go to my private Facebook group and hit me up or DM me. That's totally fine too. Hit me up on Twitter. That's fine, but don't ever respond to unsolicited, or things that may just seem fishy. Always come back to me and ask, because I typically don't do a lot of that stuff outside of my private group. Got Bobby's in the house. Fantastic. Very cool stuff. Never understand the hatred for those who were blessed to not be in the first generation of successful Americans. Are most of us not all trying to leave a legacy? Very cool. I like the comment, man. Very cool stuff. Got less than a minute here, folks. Fantastic. Got Natalie in the house. Sorry for the 9th inning call out, Natalie. It's always great to have you, man. You're so steadfast and just always appreciate your support. I really do. It's kind of the lifeblood of the channel, to be honest with you, and great folks like yourself help me make it happen. They really do. It's not all the most motivating thing on YouTube, man, to find the motivation to do this in all cases, but it's a fun project nonetheless, as long as it's being reciprocated and received in the manner that I expect it to be received, and people are getting benefit out of it. I'm certainly not the best. I'm just one of those guys trying to share a story as it relates to myself, and hopefully make it relate to those out there that need the help, because I think there are some folks out there that do need the help. And with that, guys, that is the fastest 60 minutes on YouTube. It was fast and furious tonight. Hopefully we were able to realize our goal, to empower one investor at a time. If there was somebody out there that heard some things that I said, got them interested in investing, I will leave you with this. It's not as difficult as you think that it is. Do invest. Justify this. Don't lose this opportunity. It's life changing if done correctly. It can be an atrocious nightmare if done incorrectly. So I divert back to rule number one: just do it correctly. And I've looked to suggest the ways of doing it correctly for those out there that may not have the savvy, may not have the wherewithal, maybe hungry for information, and also vulnerable to bad information. I've looked to streamline the right way to investing by capturing multiple decades of my own investing thesis that can work for all investors out there looking to build wealth for themselves and their families. Guys, I appreciate you. We will be back next Friday in the Independent Investor channel, fastest 60 minutes on YouTube. Thank you so much to you guys. Have a great weekend. We will catch you next week. No!